Yes, my dear friends, I would like to make a review of the whole topics we studied throughout the semester in this last classroom or the last week of this semester, my friends. So we have studied financial literacy course, and as I always repeated through the course, I was in an aim of that I want to create an awareness for you about the financial management, especially for the individual level. So when we say financial management, exactly in the finance literature, we mainly consider the companies and the big organizations. So, in fact, okay, the individual financial management is also the topic, but the corporate level is the one, maybe it is the one I mainly studied. So that's why it needed another effort to provide the course for the individual level. So, my dear friends, and finance is not merely about making money, it's about achieving our deepest goals and protecting the fruits of our labor. So we consider the finance from this perspective and we study it from this perspective also. Throughout this semester, we had an introduction to the economics and the financial literature. We reviewed the foundation of the financial literacy definitions, some common myths, and then we studied the financial behavior and decision influences. And then let me mark them as behavior and decisions. Then the financial institutions and the regulatory bodies was another topic in another week. So money, income, and the budgeting. This is also important for the companies and for the individuals as well. Consumption and the consumer behavior is very important for the individual level, and the saving and the personal finance also important for the individual level. That's why we studied these topics in more detail with you. Financial investment instruments, the stocks, foreign exchange markets, gold, and the forex trading was the topic of another week. And we studied the investment analysis, the portfolio strategies, basic of the portfolio formation, and then we studied the behavioral finance and the decision making biases. And then we studied the financial fraud and the risk awareness. And then finally, we studied the investment strategies and the lesson from the experts, such as the Warren Buffett and Soros, was those two of those, how do you say, famous investors throughout the world history. So we try to understand their principles about the investment and also their investment perceptions. So, in fact, all these topics are good topics for a person who wants to increase the awareness about the finance. So, okay, you are having some experiences, and your experiences are teaching you. And I don't say that you are totally illiterate about the finance. So yes, you have a literacy to a definite level. So this course hopefully increased your awareness. So okay, the importance of the financial knowledge when we consider again enables individuals to make informed decisions because those informed decisions are necessary to manage your risk and to preserve your wealth and to increase your wealth as well. So that's why this informed knowledge is necessary and making informed decision is necessary. Contributes to healthy functioning of the financial markets. So as good as knowledge, finance knowledge you have, this also contributes to the healthy functioning of the financial market. So your knowledge in finance, knowledge about the economics is not only for your own benefit, it's also for the benefit of the whole economy and for the world as well. And strong financial literacy supports both personal well-being and economic stability. So, as I said, as long as you have a contribution to the healthy functioning of the financial markets, so it contributes to the well-being and economic stability as well. So there are the key dimensions of the financial knowledge as well. There are the fundraising, financing activities, financial planning and the budgeting, saving, investment, credit management, risk management and insurance, and taxation. So we mainly in this course covered many of these dimensions. We talk about the finance, we talk about the planning, budgeting, saving, investment. Credit management is mainly related with the corporations. That's why we didn't talk much about the credit management. And risk management is also important for the individuals. And the taxation also important for the individuals. So, but anyway, as we are not the corporations, the taxation becoming much more crucial for the corporations. Also, okay, it's also crucial for ourselves because we shouldn't pay extra tax. Okay, how much tax we really have to pay? We should. Okay, but if you have some privileges, if you have some opportunities, legal opportunities to pay less tax, you have to utilize this opportunity for your own financial wealth or economic well-being. So, what else? Impact of financial knowledge? Okay, planning, growing need for the financial education is also. Yeah, surprisingly, I understand that people are not much literate or knowledgeable about the finance when I talk to the people. As the finance is my own business, so okay, I should have, how to say, more comprehensive knowledge, but some basics should also be known by the regular people. So this course or this kind of efforts to increase the financial knowledge is important. So okay, finance is from a French word, money, property, and financial affairs. It means in French, in fact, practice, it means securing the funds and enterprise needs in the most efficient way and using them effectively. Finance is the art of managing money. Financing is the process of providing funds when needed. Finance is a field of expertise, growth of the industries in the globalization and capital markets. It's provided. And also, finance consider economics, my friends, and accounting, mathematics, and statistics. So, finance is a kind of knowledge, kind of, how do you say, expertise or science, let's say, but considers economics, accounting, mathematics, and statistic at the same time. So, yes, I'm checking the slides. So I want to make the review over the topics which is maybe more strategically important than the others. So here there's an understanding about the financial markets. Why do we have financial market? What do financial markets do for ourselves? They do mobilizing savings into productive investments, provides liquidity, ability to buy and sell assets easily. They provide price discovery, determining the asset values, risk sharing through diversification and the hedging, and provides facilitating efficient capital allocation. So these are very crucial for the economies, for the well-being of the society. That's why the functions of the financial market should perform very well for the wealth and the well-being of the countries and the people. So financial markets within itself are how to say divided into two, classified in two ways. One is money market, the other one is the capital market. So when the funds are short term, less than 1 year, then we are talking about money market. When the funds are has the maturity long term, which is more than one, then we are talking about capital market. And also financial markets are organized as the organized markets such as the stock exchange, over-the-counter markets such as the um, Tahtakale foreign exchange market. So there are the spot markets, there are the derivatives futures markets, settlement at a future date. Provide the financial markets and institutions. The money market deals in the short-term liquid asset, treasury bills, commercial papers, certificates of the deposit, repo agreements are provided here. Key participants are the central bank, commercial banks, and the corporations, governments as well. Here, the purpose is the working capital, finance, and liquidity management. So the financial market and institution as a long-term instruments such as bonds, stocks, and the debentures are divided into debt market, and also provides funding for long-term investment projects. Source of wealth creation for the investors are provided in the capital market as well. So there are another classification which is called primary market, and the other one is the secondary market. So when we talk about the primary market, we consider the situation when the governments, companies raise fresh funds. So when especially the companies make initial public offerings, when the company provides their securities, their, let's say, stocks first time to the public. So then these interactions happens in the primary market. So when a stock which is already being sold, resold another time, then we are talking about the secondary market. So there are the depository institutions. When we say depository institutions, you should understand, in fact, the commercial banks, savings and the loan associations, and the credit unions. But mainly commercial banks such as Akbank, Ziraat Bankası, these are the depository institutions, in fact. So deposit means the money the customers, deliver to the bank. So I have some savings and I don't want to keep them in my home. And when I have my money is delivered to a bank account, they are called deposit. There are also non-depository institutions, which means that it's a financial institution, okay, but they don't accept the monies from the regular customers. So that's why they are considered as the non-depository and the contractual institutions. Here there are the insurance companies, mobilize premiums, invest in long-term securities. There is the pension funds, manage retirement savings, invest for a long horizon. There is mutual funds, pool resources from investors, diversify portfolios, provide stability and long-term capital information. So, meanwhile, we have the investment banks and other intermediaries as well. So when we look at the global financial markets, there are some major centers such as London, New York, Tokyo, Hong Kong, and the Frankfurt. So when we look at the regulation of the financial market, then, for example, in Turkey, we have the Capital Market Board. In USA, there is Securities Exchange Commission. So depending on which country you are, there is always an institution which is responsible with the protection of the rights of the investors, and meanwhile, they are the ones who improve, who generates regulation for the market. So as a conclusion, financial markets and institutions are enable saving, investment, and the growth. They provide liquidity, stability, and the efficient research allocation. Here the challenges are the risk management, regulatory balance, fintech disruption. Future is the more digitized, globalized, and innovation-driven economies. So, okay, we already studied the financial literacy. That's why I don't want to reconsider the financial literacy. Dimension of the financial literacy, okay, includes some budgeting, saving, credit, and debt management, investing, risk management, and the retirement and the tax planning also. So budgeting and cash flow includes preparing and monitoring a budget, tracking income, expenses, managing spendings, habits, ensuring financial discipline and the control. Saving and emergency funds consider role of short-term savings for unexpected needs, importance of the long-term savings for the measure goals, rule of thumb. Here is that emergency fund covering 3 to 6 months of expenses. Tools are savings accounts and money market funds, my dear friends. So when we consider the difference between saving and investing, common investment vehicles are the stocks, bonds, and the mutual funds. Okay, here, my dear friends, when you have some savings, so you need to make investment because you need to protect the value of your savings. So that's why the having some investment provides this opportunity to you to keep your money values, or sometimes, or expectedly increase the value of the wealth you have as well. So meanwhile, it needs risk management as well, and also retirement and the tax planning is also important for the individual level as well, building wealth for the retirement through pension funds and the retirement accounts, importance of starting early, power of the compounding. For example, here in fact it wants to indicate that when you start to make the saving as earlier as possible, thanks to the compounding interest rate calculation or the accumulation opportunities, so the money your investors will get multiplied year by year. So this will be in benefit of yourself after the years. Yes, what else? Okay. What is economics? Let's study this. Economics is the study of how people and the societies use limited resources to satisfy unlimited needs and the wants. So here, this is very basic explanation of the economics. It is the study of how people and societies use limited resources to satisfy unlimited needs and the wants. Central problem here is the scarcity, choice, and the opportunity cost, my dear friends. Explains how individuals, firms, and the governments make decisions, help us understand issues like prices, wages, unemployment, and the growth, provides tools to make smarter choices with money and the resources. So every society must answer what to produce, how to produce, from whom to produce also. These are the very basic questions of the economics as well. So because there's limited sources in every economy, and within these limited sources and opportunities, because there are limited amount of number of people, there's limited amount of land, there's limited amount of raw sources, and etc. So within these limitations, what we should produce, how we should produce, and for whom we should produce is becoming the crucial questions needed to be answered by the economics. But the economics within itself is divided into micro and the macroeconomics. Microeconomics studies the individuals, households, and the businesses, such as families and their decisions, and individuals and their decisions as well. And the macroeconomics study the economy as a whole, For example, what causes inflation or the unemployment? Okay, unemployment is an fact related with the whole economy, not only one section of the economy, and inflation is also. Both are important to understand the full picture, my dear friends, to better understand markets around us, prices, job earnings, to prepare for the responsible citizenship and the decision making, to connect economics with personal life, financial literacy, and the public policy. So here there's traditional economy based on the custom, traditions, and the family roles. Here are the examples: tribal or the rural communities. There's a common economy. The government makes most decisions. Here examples are the North Korea's former Soviet Union. Here, in fact, what it tries to explain to you, the types of the economies are changing country by country. Okay, the economy may be run in a traditional way, maybe run in a common way, maybe run in a way of the market economy, or it may be a mixed economy. So mixed economy consider the market and the government interventions at the same time. Turkey is an example of the mixed economy. But for example, United States is a kind of market economy. Decisions are made by supply and demand function of the whole economy. So there are the features of the economic system: traditional, common, and the market mix, maybe as we started already. So meanwhile, when we consider economics, we should also talk about the factors of the production. There is land, labor, and the capital, and also entrepreneurship. These are the main factors necessary for the production. So if you don't have one of these, you will not be able to make a production. To be able to make a production, you need a land. So this land may be water, forest, or the minerals, or the opportunity or the environment you need for the production. So, okay, you have the environment, you have the facilities for the production, but you need the labor. Here, the human efforts, skills, and the knowledge becoming important. Then after, you need some capitals. So capitals here, maybe the monies, maybe the machines, tools, or the money, as I said already, and also then there is need for the entrepreneurship. So you may have all of these, but if you are not entrepreneur, if you don't have an entrepreneur who has the motivation to utilize all these opportunities for the production, then you will not be able to make the production. There are the examples of the factors of the production. There is the land, labor, capital, and entrepreneur. Okay, we already studied this. I'm skipping to the other slides. So here, okay, in fact, this is about the finance. We are studying the financial literacy. And also I talked to you about economics. So economic literacy and financial literacy are related, but focus on different levels of the knowledge. Understand differences is key for making better decisions also. So in fact, when we talk about economics, in fact, we are talking about the GDP, the unemployment, the production factors, and the whole economic production processes, and the welfare and the well-being of the society is the matter of the economics. But when we talk about the finance, then we are talking about mainly funding and utilizing the funds, the proper usage of the fund, management of the risks is becoming the core concept of the finance. But without a good financial management, you cannot, develop your economics. Economics needs this finance knowledge, financial practices, and the financial well-beings. So what else we have? Okay, economic literacy, financial literacy. Here there are the differences between the economic literacy and the financial literacy. Economic literacy helps you understand the big picture, and the financial literacy helps you manage your own life. at the individual level. So as a corporate level, okay, economic literacy helps you understand the big picture as a corporations where you are. But financial literacy as a corporations also help to you to manage your own company. So is when you are an individual, okay, you manage your own life, but when you are a company, you are able to manage your own company. So so here there's a technical term about the poverty trap. It's a self-reinforcing cycle that make it very difficult for people to escape poverty. It's like being stuck at loop. Low income cannot save or invest. Low productivity remains low income again. For example, a farmer cannot afford good seeds to harvest are poor. So harvest. So when as a farmer, if you don't have good seeds, so the what you will harvest will also be poor. So which will also lead to less money for better seeds next year. So when you have less money for this year because of your poor seeds, and the productions will also be poor again, and then you will not be able to buy better seeds to how do you say uh, use them for the next year. So another reason for the power trap is the lack of education, poor health, access to the no access to the capital, weak institutions, and geographic factors are the cause of the poverty as well. So we should understand inequalities and we should be knowledgeable about the income inequality, wealth inequality, and opportunity inequality as well. So here the breaking the cycle is the education and the health, investing in human capital, access to the finance, social safety needs, progressive taxation, and the good government. So when these are provided, then the company, then the countries and the societies will break this cycle and will improve in their position for the financial and economic manner. So being knowledgeable about the key macroeconomic indicators is also important. For example, you should know what gross domestic product means, GDP means. GDP is the total monetary or the market value of all finished goods and services produced within a country's borders in a specific time period. What it tells us, it is the most common measure of a country's economic output and the size. Here, the growth rate, rising GDP growth rate, usually means the economy is expanding and people are producing and consuming more, my dear friends. So here, you should know, you should be knowledgeable about inflation as well. Inflation is the rate at which the general level of the prices for goods and services is rising, and consequently the purchasing power of the currency is falling. How it is measured, often measured by the consumer price index, which tracks the price of a basket of common goods and services. What is the impact? High inflation reduces the value of money, making things more expensive and eroding savings. Uh, Unemployment rate here is also important. It is the rate of the percentage of the total labor force that is unemployed but actively seeking employment and willing to work. In fact, what it tells us, it indicates the health of the job market and the overall economy. So here, impact is high unemployment means fewer people are earning income, which can lead to lower consumption and slower economic growth, my dear friends. Interest rate is also another indicator of the economy. It is an interest rate is the cost of borrowing money or return on saving money. It is usually expressed as a percentage of the amount borrowed or saved. And what else? Do we have an exchange rate? Is the value of the country's currency in relation to the another country's currency. For example, $1, 30 Turkish lira. It means that US dollar can buy Turkish lira. So here it is all becoming very crucially important for the economies. Exchange rates affects the cost of imports and the exports, influencing international trade and tourism. A strong currency markets imports cheaper, but exports are more expensive. Government debt, public debt is the debt amount of the government. So governments are also gets indebted. So this is also important economic indicator. How much debt do Turkey has, do US has, do Germany has? Summary of the macro indicators. Okay, there is, you can review them from the presentation. Okay, there are the many topics. In fact, if we are study all of them one by one, it will get longer and longer. But as I have a heavy, very strong headache, so I need to have a pill. But I'm here. I will finish when I return back again. So here at this point. Yes, we made a break and then we can continue with the rest of the topics. So, what we talk about financial, yes. Okay, I don't want to talk about the importance of financial literacy. That's enough. We already talked about this. Yes, we studied the money also. It's a unit of account, store of value, medium home exchange. So what we money used for? We use it as unit of account, use it as a store of value, medium of exchange. These are the functions of the money effect. So there are different type of money: commodity money, representative money, fiat money. Commodity money is the medium of exchange, has intrinsic value because of its commodity. How do you say value? As like the gold, as like the silver. There is a representative money. Medium of exchange represents a claim on an item of a value. So fiat money is the money we really use as a paper or the coin way in our pockets. So okay, this is the fiat money. So for example, how much money is in circulation in economy is important. So and they are classified and they have some numbering. For example, the currency and the coins plus check-able deposit plus travelers checks are called M1, money one, let's say. But when you add, okay, this is M1, when you add savings account, time deposits, and money market mutual funds, meanwhile, the time of deposit started less than the $100,000 ones are considered here. Then we talk about the money two, money one plus all these. Then it goes to the money two. So money and the credit cards are not same thing, my friends. So sometimes we do some illusion and the mistakes. As we have the limits in our credit cards, we buy more and more, and as we buy more, by using the credit card, it is not a how to say, it is not mm, good for the savings. So it's becoming very harmful to our savings. So we need savers, we need financial markets, we need financial intermediaries, we need borrowers. So the banks, savings and the loans, credit unions, mutual funds, life insurance companies are becoming important. So there are some trade-offs. So when we have the risk or default risk, then we expect more return. So when we wants to be more liquid, then the return. Return here means your earnings from your investment, in fact. So when we cannot have return or the extra return or more return if we same time wants to have a liquidity. So we have to make some investment to earn returns or to get return. Okay, we already also studied the financial market and the institutions, why they are important, which way they are contributing to the economies. And also we studied the functions of the financial market. This is also important topics. Financial market mobilize the savings into productive investment, provide liquidity, price discovery, risk sharings also. So financial markets, money market and capital market are the divisions. When it is less than 1 year terms, it is money market. When it has the maturity more than 1 year, then we talk about capital market, over-the-counter market. Organized markets are the stock exchange. So you should all know these facts, my friends. So depository and non-depository institutions, we already studied this. We already studied the funds, what type of funds we have. This may be important because you have to know the investment opportunities in the market to be able to make educated decisions of the investment as well. So there are the regulations for every countries to organize, to regulate the financial environment for the benefit of the investors. Yes, investing and insurance was another topic we already studied. So solvency is important. Solvency is the situation when the company maintains the momentum of going concern, attracting customers and the finance. So solvency is the desired situation. But when a company is insolvent, it means that company has more liabilities than the assets, and the company will not be able to cover the liabilities. So meanwhile, we studied the central bank, what it is working for. These parts of the importance. The bank's duties and the responsibilities set by the central bank address the following 5 areas: price stability, financial stability, exchange rate regime, the privilege or the printing and issuing banknotes, and the payment systems are important. Price stability, financial stability, exchange rate regime, privilege of the printing and issuing banknotes, and the payment systems are important. Okay, as we already studied, the money, type of money, quasi money. These are also important informations you have to review before the examination. And the central bank digital currencies. You should also review this one because this is becoming much more common in the future. So we will have to deal with this more and more. Okay, here the money supply measures are again explained to M0, M0, M1, M2, M3. Commercial banks, central banks, investment banks, credit unions, payment processors, fintech companies are all provided. There are some key risks: inflation risk, deflation risk, counterfeiting, bank runs, cybersecurity, regulatory risk, and the credit risk, systemic risk also. The risk types you should also know. So at the individual level, you have to maximize your earnings also. But to be able to maximize your earnings, you need to um, earn well also. You need to save very well. Maybe you should have some passive earnings. But here, to be able to make the proper saving and to be able to decrease the expenditures, you need to make a budgeting. Here in this part of the course, we talk about the budgeting. So, and as I simply, the budgeting is the arranging the money coming and the money going out. Money coming are the incomes, money goes out are the expenses. So more income, less expenses will provide extra money. And as long as you keep your extra money, as long as you do a good investment with the extra money you can keep as a saving, that much wealthy, that much better financial management you will do, budgeting you will do for your own benefit. Okay, here there are the budgeting information, budgeting principles. Yes, here there are some examples how a person can make the budgeting. So when the, for example, in this example, the monthly income is $3,000. So the needs, the wants, savings, and the repayments considered. For example, as you see, there are the percentages. How much will be how much of the money earned, or which percentage of the money earned will be used for the needs, will be used for the wants, and will be kept as saving also. So there is another example here. You can review them again. So we talk about the consumption as well. So core driver result of consumption, we caused what caused consumption was also topic. Okay, you can review all these, my friends. So I'm trying to make a review of the semester, but there are many topics. So how much time we should spend for each one of the topics as we are reviewing them, I cannot be sure, in fact. So I'm just surfing on the presentation. But I understood that we studied many topics. So I hope it was fruitful for yourself. So we also studied how the social media, the advertisements influence our spending behaviors. So you should be careful about those. So yeah, in fact, here, okay, the media, the marketing is good. It is necessary. By this way, we become aware of the products and the facilities and the services which are good for our benefit. But in fact, we have to spend our money and the time for the goods and the services. We really need them. So we shouldn't spend money for unnecessary services and the goods. So that's why in some cases the advertisements provides such a feeling, creates such a feeling that you really need that product and service. But in fact, when you think in a rational way, you may understand that you don't really need that product or the service which is advertised to you. So some behavioral situation, the behavioral situations which leads you to make improper decisions, which is harmful for your own well-being. So uh, this is also needed to be considered. Okay, we studied the time value of the money. In fact, this is the study of the calculation of the you know, the interest rate. So you should also review all these calculations. This may be necessary for you to be able to make the calculations if I ask some calculation questions in your exam, in the final. And annuity explanation calculations was also the topics. Okay, in fact, we can finish here. As this is the last week, I suggest you to make the review, good review of the presentation. And if you find the time, you can review my explanations, and it may also be helpful to you. For the last week, as I have a very heavy headache now, so it will be good to finish here. Do you have any question before I finish the course? Yes, I really have a bad headache now. Okay, hopefully you will get better grades again as you get in the midterm exam. Okay, take care. Bye-bye. I think you don't have any questions. I wish success to all of you.